What is going on with Google, also known as Alphabet? We see shares trading up 2.25% today, recording this Friday, the 25th, up nearly 10% over the past week as Alphabet looks to retrace the downtrend year to date, down 14% over the past year, even up 2.5%, let's say. Over the past 5 years, though, you see this longer term trend is still in play. Shares currently at 162, almost 163, still in the lower half of the 52-week range of 140 up to 207. Big earnings announcement yesterday. We got a 5% dividend increase from 20 to 21 cents. We'll take a look at that dividend chart here in a moment, as well as a $70 billion authorization of a stock buyback. That represents a 3.5% stock buyback of the entire market cap. So 70 billion into that 1.95 trillion, 3.5% share buyback authorized. Big announcements, or I should say big results in the earnings that were just announced. We have revenue up 12% year over year, operating income up over 20%, margins expanding to 34%, net income up 46%. There is significant CapEx that is underway. We'll talk about that here in just a moment. On the Waymo side of the house, that's their self-driving vehicles. We've got Waymo serving more than 250,000 paid passenger trips each week. That was from the Austin, Texas launch, soon to be Atlanta, Georgia launch. So that's a 5x increase from a year ago. A couple other big announcements were this $75 billion capital expenditure plan for 2025 as they look to increase capacity in AI and data centers, also for their cloud computing, which saw some strong results as well as the Google Cloud offering has been lagging Microsoft and certainly Amazon, but they're gaining ground there. 270 million paid subscriptions now across YouTube and Google One. We already mentioned the Waymo 250,000 weekly trips. Let's see here. Consolidated revenues of 90.2 billion, up 12%. Google Cloud revenue growing 28% year over year. Phenomenal growth there. Really the best growth we've seen from Google Cloud. Operating income up 20% to 31 billion. Net income up a ridiculous 46% to 34.5 billion. Here you're seeing again that 75 billion capital expenditure that they're anticipating. Golly, I mean, this 5% dividend increase, while some people were disappointed by that, keep in mind that Google is a very, very recent dividend payer. And when we take a look at the balance sheet, you'll see exactly why people anticipate greater future growth of that dividend. Here you're looking at revenue expectations for fiscal Q1 of 2025. But this is a nice chart. It actually breaks down the different segments of Google revenue. And so you'll see that Q4 is consistently the highest revenue quarter for Google. So for example, for Google search, Q4 of 24, 54 billion, Q4 of 23, 48 billion, Q4 of 2022, 42.6 billion. So Q4 is always the best quarter for Google as advertising revenue ramps up for the holiday season. But if we look year over year at Q1 results, so we just had the announced Q1 of 2025, Google search came in at 50.7 billion. How does that compare to a year ago? Well, we've got Q1 2024, 46.2 billion. So 46.2 up to 50.7. 2 years ago, that stood at just 40.4. Here you see the Google network revenue for Q1 2025. We've got 7.3 a year ago, 7.4 2 years ago, 7.5. So that's pretty stagnant. Subscriptions to the platforms and devices, 10.4 billion a year ago, 8.7 2 years ago, 7.4. So substantial growth in the subscription platforms. So the paid YouTube subscription would be the headliner there. Google Cloud, a key segment for Alphabet to continue to grow this. Q1 2025, 12.3 billion. A year ago, 9.6 billion. So massive growth for Google Cloud. 2 years ago, that stood at just 7.5 billion. So 2 year growth in Google Cloud from 7.5 billion in revenue all the way up to 12.3. Lastly, YouTube ads, Q1 of 25, we have 8.9 billion. A year ago, it was 8.1. 2 years ago, 6.7. So you're seeing growth across the board, which is what is enabling these unbelievable cash flows from Alphabet here. Taking a look at the annual revenue chart, it's up and to the right, obviously. The year ending December of 24 was 350 annual. Year before that, 307, and a year before that, 282. So unbelievable growth, especially when you consider that this is a $2 trillion market cap company. Earnings estimates going out into the years ahead. So fiscal 25, we're expecting EPS growth of 15.6%, followed up by 8.8 and then 15.4% going into 2027. Sales growth expected of, let's say, 10.5% for the next 3 years. So you've still got double-digit sales growth out into the years ahead. Over the past 3 years, that revenue CAGR is 10.75%. So the growth really isn't slowing down, which is absolutely incredible. At current price levels, so shares are currently trading for a forward price to earnings ratio of nearly 18, 17.9. And if share price was to hold steady with the growth expectations as they're currently baked in, you'd be looking at a price to earnings ratio of just over 13 and a half out into 2027. So this is absolutely growth at a reasonable price, a very reasonable price, I would argue. You're always going to have the stock dilution aspect of a company like Google, of employee compensation, but that $70 billion share repurchase program is going to go a long way to offsetting that, certainly. Profitability, never been an issue with a company of Google's business model. Gross profit margins, 58%, net income margins, an unbelievable 28.6%. And here is exactly why future dividend growth should continue as far as the eye can see. The balance sheet, you've got 28 billion in debt offset by nearly 96 billion in cash. This is absolutely a company that has so much cash that there's really not a whole lot they can do with it. That's why you see the massive capital expenditure into AI and data centers, cloud computing, and AI for the future. And they have to spend their money somehow. So that's why you see the capital expenditures, you see the share repurchases, and you see the dividend increasing. Dividends have only been paid, dividends have only been paid. Let's see here. I'm looking for the dividend growth chart. Let's scroll up here. Well, that's how recent the dividend is, right? There's no years of dividend growth because they've only been paying a dividend for a year. The annual payout was 80 cents. I believe now it's going to be 81 cents. So just a 0.5% dividend yield. So certainly this is not your high yield dividend play, but if you're a dividend growth investor with a long time horizon, you're going to enjoy this for the decades to come. Dividend yield, again, just 0.5%. The dividend will increase from 20 to 21 cents a quarter. And the there was just a recent payout of that distribution on March 17th. There you see the share ownership structure and the simple moving average. It is below its 200-day. So from a technical perspective, you could say that's bearish. But after an earnings report like this, hard not to be bullish on a name like this with its current valuation as it compares to other tech names and the market in general. A company like this should not be cheaper than the S&P 500. I'd have a hard time arguing this is not a higher quality company with a healthier balance sheet and a more sustainable business model than your typical S&P 500 company. Yes, there is the litigation risk out there right now, but that's just what you're going to have to deal with when you play in these mega cap tech names. So wanted to get this information out to you. Big announcements. Thank you very much for watching. If you're an investor in Alphabet, This is a perfect example of a company that's returning capital to shareholders through share buybacks and now an increasing dividend. Take care. Have a great weekend. Bye-bye.